It's not the role of the regulator to be making judgment calls about what types of crypto or digital assets people should invest in. The role of the regulator is to create a safe perimeter so that innovation can happen, but also so that financial stability is preserved, singleness of money is preserved, markets are protected, and also so that consumers can make their choices in a well-informed way. And obviously, you need to think about that from a wholesale and retail perspective, what the guidelines are, and how people can adhere to high standards. And standard setting is a really core part of what we do at GDS and working with public and private sector to really promote those high standards. But as far as what the role of the regulator is, it's very much their role to just create that environment for innovation to scale. They're not the innovators, they're not the coders, they're not the developers. That's the job of industry. But really what they're there to do is to create that safe perimeter so that markets can function in an orderly manner.
Yeah, and I think when you're talking about that exponential growth, what's been really interesting to see is how it has exactly done that. Like, it serves as an enabler in the past few years. And as regulation is becoming clearer in different jurisdictions and frameworks being developed globally, it has really served as that enabler for firms, whether it is on the more wholesale capital market side, all the way to the fintech startups, to really build out products that allow markets to leverage the technology out there. So I remember last year we were talking about MiCA, and all of the concern was about regulatory arbitrage and is this going to work? Where is it going? Whereas today, the conversation that we had about MiCA is how it's setting a standard, and other jurisdictions are trying to kind of harmonize and then converge with MiCA. And industry is just sort of getting on with the implementation and meeting those requirements because, as I said, we really core belief and tenet of what GDF does is trying to drive that best practice adoption of both industry standards, but as well as regulatory standards. And our members, you wouldn't participate in an organization like this if you didn't have a compliance first approach and want to work with regulators. And so it's really exciting to see them moving to that maturity of the market, maturity of the regulatory frameworks, and that in turn will enable for firms and this industry to grow and scale. If I just reflect on the past year that we've had, I think there's no uncertainty anymore. I think for a long time we've had questions as to whether, this, that, or the other will take off. And I don't think there's really any hypothesizing around that anymore. You have all of the major players from large financial institutions to, the capital market fintech innovators who are now IPOing and that kind of stuff. I mean, you can't say that it isn't a market that is moving. So there's a lot of certainty, there's a lot of bullishness that's coming with that. I mean, despite macroeconomic tailwinds at the moment, I think, the change in the Trump administration, or the new Trump administration as of January, the wave of executive orders that we saw in the few weeks after that, there have been very strong signals for industry where, it's opened one of the biggest markets in the world, obviously. When I reflect on, I think it was January last year when the Bitcoin ETFs came to market, there've been European equivalents of that for the past 8 years, but the figures that the market cap that they hit in the first 6 weeks of operation was higher than, I think, the whole 8 years that the European counterparts have been in the market. So if you just think of that in terms of signals for the industry, and you can extrapolate it to many other things, I think, the US being in the game now as of January has really, shifted the tone that a lot. There's no going back. There's no uncertainty around that anymore. I think we're going to see a lot of innovation in the stablecoin landscape, because that is very much the mandate from Congress at the moment. Both the Stable Act and the Genius Act are being passed through Congress at the moment, and I think we're going to see that kind of continued push towards stablecoin innovation in the US. I think that will suddenly have a trickle effect down in other jurisdictions where we continue to see that development. One of the key reasons that they're so important to me is that they're really the enabler for a lot of cap markets moving on chain. They can serve as the cash leg at scale, and that's it has been one of the missing pieces of the puzzle today when we're thinking about firms building out their digital asset strategies, wanting to tokenize various financial instruments. The cash leg is critical to that, and it has been a challenge for firms to be able to build that out because they haven't had it to date. So I think there's a lot of interest at the moment using sort of stablecoins that are out there, whether it's USDC or, for example, we're here, in France, the SocGen Forge that have their euro-denominated stablecoin, and Standard Chartered has just now filed for an application for a Hong Kong-denominated stablecoin with the HKMA. Those are very interesting vehicles for firms to actually build out their digital asset strategy so that it's a full spectrum offering, and the cash leg is critical. So that's one That's one area where I think stablecoins play a very important role. I think when you look at the broader crypto ecosystem, there's a lot more there. I mean, it is the essence of it in a nutshell. We have seen members doing really interesting work in the stablecoin ecosystem as a whole, which really fall outside of financial services. So thinking about using stablecoins for remittance, for example, or FX, those are, I think, really interesting applications to pay for. I think, we were talking with one of our members that does a lot of work in the aviation and shipping industry, and they have very tight and strict timelines in terms of being able to purchase oil before cargo can move and stuff like that. And well, if you have a stable coin in which it's settled immediately, that actually allows you to circumvent a lot of bureaucracy in place. So lots of interesting applications that span way outside of financial services.
They are less risky actually than if you think about traditional deposits, because stablecoins are bearer instruments. They're the one-to-one backing with high quality liquid assets, at least in our most regulatory frameworks we're seeing evolve. And that means that you don't have that counterparty risk as you do with something like a tokenized deposit. Tokenized deposits are still evolving, and I think that we'll see them kind of taking different forms, but that enables you to have a different sort of financial stability and risk management mechanisms. And I actually think that there is a future world in which we have all of these multiple forms of money, both public and private money, so central bank money and commercial bank money, of which stablecoins are a new form. And I think that, there's huge potential there for them to be used to manage risk in new ways that you couldn't necessarily do with deposits, which are not bearer instruments.